cap, small cap.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street and what should your strategy be when the markets are at record high levels. It's been a fantastic first half of trading session so far. We've seen 66,000 levels for the first time on the Sensex today. The stupendous rally of about 600 points intraday. The markets are still hovering near the all-time high levels, about 0.8, 0.9% of a move for both the benchmarks, Nifty and the Sensex. The Nifty also hovering near 19,550 odd marks, up about 150, 55 odd levels right there. You're looking at support coming in from the Nifty Bank, that's up by 350 points. And of course, above that 45,000 mark again. The broader markets slightly underperforming the benchmarks, but still up in the green right now. In terms of the various other sectoral indices as well, you're looking at the IT sector, looking at gains coming in. Of course, TCS leading the charts from the IT pack. 2.3% move on the upside for the IT sector, and that's the one that is leading among the sectoral indices. The realty stocks are shining, metals are shining bright. Apart from this, healthy gains on the auto back as well, and apart from that, you're looking at some gains coming in on the FMCG pack as well. In terms of the stocks, let's look at TCS, Infosys, the top gainers on the Nifty pack, up by 2.5, 3% higher in trade, definitely contributing higher to the markets. HDFC Bank, that's moving the Nifty higher. Hindalco, SBI Life and LTI Mindtree, all of them supporting the moves as far as the top gaining action on the Nifty pack is concerned. On the downside, you do have some energy majors like Power Grid, Coal India, that's down in trade. From the auto pack, Maruti, Eicher Motors are sulking a bit. NTPC is also slightly down, but definitely a historic day. Joining in with me is now Shailendra Bhatnagar, editor for Markets on Business Today TV. Shell, historic day. We've already had some samosas in the office to celebrate this historic mark. Tell me and help all our viewers understand, what is leading to this stupendous rally in the markets, and is it here to stay? For all those investors who've been waiting on the sidelines thinking that when the markets will cool off, I will enter the markets, what would be the message from you?
It's actually, first of all, hello and thank you for having me over. Let's take these questions step by step. So the reason behind the rally is fairly clear. The last missing link was the move on Wall Street, which came in yesterday evening. And that's because the inflation picture in the US is improving. And that's resulting in a thought that the peak interest rates that you've seen in the US markets may have happened. So there are two interest rate hikes left for 2023, which the U.S. Federal Reserve had promised. And what is basically the thought after that inflation number, which came at 3%, is that the Fed will pause, and that pause might be extended, or at best, or let's just say at worst, we'll have one rate rise. So the market in the overseas space in Wall Street is fairly sanguine that we've seen the worst behind us, and therefore you had a fantastic kick up on Wall Street that reflected in Asia and is now very strongly visible on Indian markets. It's a carpet of green. You've
Yeah.
mentioned a lot of indices. I'd like to mention that the mid cap index is at a record high.
Yeah.
And that was the reason why we celebrated with samosas in our newsroom. And things are likely to get better for another reason. The overhang that was on HDFC Bank has been removed. The merger with the parent is in place. And because of the increased weightage on HDFC Bank, you'll see a lot of money pouring in this particular stock, which is the highest weighted on the Nifty as well
Yeah.
as the Bank Nifty. At the moment, up $20 at 1653. I'm fairly sanguine that you'll see a record high on this one fairly shortly. And the
Okay.
low that we had made yesterday on HDFC Bank is going to stick around. So, Sakshi, that's the broader prognosis of the market.
Yeah.
And I would imagine 19,300 is a very, very strong support for the Nifty, which is acting as a buttress. Remember, this was the low of Friday's trade, and that has not been breached. In fact, the market has built up on those gains, up about 150 today at 19,536. Sakshi.
Absolutely, Shell. Thanks a lot for giving us all those data points. Very, very helpful for all our viewers to really understand where the markets stand at this point in time. But like I was pointing out, what is the strategy that investors must follow at this point? What should they do? And more importantly, what should they not do when the markets are at record high levels?
Let's take something which is what they should do. Sakshi, I meet a lot of people, both in the newsroom and outside our wonderful office. And there is a feeling of being left out. So, a lot of people are coming with their eyes open and with very, very heavy expectations that their money is going to double in 1 month. That is not going to happen. So, one, invest certainly in this market. We are on a very long and good runaway, and
Yeah.
that runway is pointing up. All data points to a good, strong rally on the macro side and the micro side. I'll give you a very good example. TCS
Yeah.
and HCL Tech
Yeah.
gave earnings that were below expectations. TCS is up 3%.
Yeah.
HCL Tech is in the green. This is the hallmark of a bull market, that bad news is treated in a manner that nothing worse can happen from now on. Therefore, the dip that is there, just purchase and
Yeah.
forget. So, one thing is that don't come into the market with very heavy expectations. Two, do not invest at one shot.
Yeah.
Have to ride this rally, remain invested. Those people who try to come in and exit the market at a time and price of their choosing, well, pay a very heavy price in terms of getting wrong footed. So, have lower expectations, invest for the long term, do not exit, and invest via a good equity fund if you are new in the market,
Yeah.
and do SIP. One lump sum is a dangerous thing to do. And
Okay.
believe in the India story, stick to it and make tons of money. That's the basic rule of riding a bull market. Sakshi, will be surprised to see the stamp on the Nifty 1 year later.
Yes, exactly. I was coming to that, Shell, that 66,000 out on the Sensex is the 1 lakh mark now, in vicinity now. And how soon do you see that happening for the Nifty as well? I'm sure that you've been watching markets far longer than I have been doing, and you would have seen Sensex at even 6,000. The journey
Yes.
has been spectacular. So, what do you expect going forward?
So I've seen the Sensex at sub 3,000 also, Sakshi. I can tell you the day and the date also. It was, I think, in September 2001, after the Twin Towers had crashed in the US. And I so distinctly remember those very, very bad days. I can't even begin to tell you how bad those were, gut churning days. But people must remember that both the Sensex and the Nifty, and for that matter, any index, it's a compounding animal. You will definitely see 1 lakh on the Sensex, not because it is forecast in some panchang or in some astrological book. No, because companies that perform well are added into the Sensex. Those guys who are not doing are removed. And because good companies compound their earnings at a higher rate than the index itself, on average, the Sensex appreciates by 13 to 15% each year.
Yeah.
Between 16, 66 and 1 lakh, there is a difference of just 34,000, right? So it's about, if the index is compounding at 13%, and if you divide 72 by 30, that is the time when your money will double. So it's simple mathematics. People
Wonderful. Yeah.
understand this. If you even don't want to buy an equity diversified fund, please at
Yeah.
least get into a Nifty ETF. You will at least make that much what the index is giving you. But if you
Yes.
want to outperform, buy a good quality equity diversified fund, which Sakshi and I discussed. So 1 lakh is coming. I don't know when, but it will definitely come.
It'll definitely come. So definitely stay invested. That is the mantra for you in markets. You want to stay conservative, go with an ETF. You want to outperform, definitely go with the suggestions of a diversified equity fund that Shell has indicated. And you can continue to watch our mutual fund show to understand more about the mutual funds as well. But Shell, from here on, which are the sectors that are likely to outperform? I mean, we are seeing the banks come, and we've been discussing the PSU banks rally for a long time now. The defense pack amid Prime Minister's visit to the France. I mean, some of the stocks have rallied almost 70-80%, like Premier Explosives I was witnessing in just the last few sessions. Or Zen-Tech is up 40% in the last 3 days on defense orders. I mean, if someone has a visibility of say 5 years, 10 years, is this the sector one should definitely have in their portfolios?
So Sakshi, defense is an on and offense, which I often say, but now no.
Okay.
Let's not get carried away with the enthusiasm that is there in the market on specific defense counters like Masdoc, Hindustan Aeronautics, Zen Technologies, and of course Bharat Dynamics. This is a rally which is fully baked.
Okay.
Entering into stocks that have doubled over the last 6 odd months is fraught with danger.
Yeah.
Anything that goes up so sharply definitely comes down. That's the law of the market, and that's how it works. And the more you ask me, and people in the newsroom or people outside keep on asking me, defense mein kya kharide, ye kharide, wo kharide. I always tell them, now wait. The good meat part of the rally is over. Your hands might get burnt at this level. So wait for the same stocks to correct and be patient. There is no point entering at RSIs which are above 90, above 100 in some
Got
of
that.
these stocks. They are overstretched. But
Okay.
yes, defense is a very big theme and a theme with very strong legs. But the fact at the moment is these stocks at the moment look overstretched. I would advise strong caution. In fact, I would just say that wait it out and you'll get better prices.
All right, then. Many thanks, Shell, for being with us on the show and discussing all these wonderful insights on a historic day with all our viewers. We could just say that the rally has just begun for all those investors who've been having this FOMO that they've not participated. You have a long-term horizon. This is the right time. It's always the right time to be in markets and stay investors, like Shell points out. Many, many thanks, Shell, for being with us. Spectacular rally still underway. 560 points up on the Sensex, 65,958 right now. 19,534 currently on the Nifty as well. We'll continue to watch out for as to all the momentum in the markets so that you can track the stocks, the sectors, and everything that matters to you as an equity investor in the stock market. So do stay tuned with us onto Business Today TV. Don't forget to subscribe to this channel and continue to engage with us on our other social media platforms as well. Until then, many thanks for tuning in.
Hello and welcome. You're watching Business Today Television. I'm Tanya Neja, and joining me is someone who needs no introduction. He's very popular on social media. He keeps sharing his love for